Hi, let's talk about Altria Group. It's a company through its subsidiaries manufactures and sell cigarettes, tobacco products, and wine in the United States. Market cap of the company is currently 100 billion, so it's quite a big company that is trading 42% below the site's estimated fair valuation because of the correction which is going now, and also earnings are forecasted to grow almost 12% per year, and they become profitable this year. There's also risks, and fund information should not consider investment advice. That they have high level of depth and dividend that they are paying with huge yield 7.01 is not well covered by earnings, and also large one-off item impacting financial results. But as you can see, the lately price corrected by the depth financing and proxy vote issue and so on. Anyway, the market performance we see here, 1 year return 25%, which is pretty much same as the industries and half as big as the market. Currently market performance is huge, 55%, so pretty huge. And long-term price volatility same as the industry, less than the average market volatility. And as we can see here that the price is corrected, currently is not 49, it's currently $47 per share. It has, based on tip ranks, 10% upside, and in good scenarios it could be reaching the 58. Also, I think the market watch, yes, it has the good scenarios $60 per share. And yeah, the simple Wall Street is not so accurate here compared to others. Fair valuation says $85 per share. Anyway, future growth 11%, and earnings per share is forecasted as well as to grow. The EPS in the next year could be around less than $5, so it's pretty good. And past performance, unfortunately, annual earning growth decreased by 26%. Financial health side, so yeah, as expected, they do have high level of depth, which they took back in 2019, and it's currently 29 billion, and the equity that they are having less than 3 billion, and also they do have cash 4.9 billion. And yeah, as you can see here, debt to equity ratios 994%, which considers very high, and as you can see on the balance sheet, pretty much red here. And yeah, so that is one problem where you should not run of the dividend yield if you get the strategy to build the portfolio with high dividend yield, which is for example here over 7%. But if the equity keep decreasing, the cash also, and if the debt level continues to grow, then they have to cut the dividends, or I don't know, or they put more stock outside. So simple safe dividend shows, yeah, that they did on a recession back in 2008, and yeah, they did reduce the dividends that they had from over $3 per share to $1.50 per share, so halfway. So this could continue, but one good thing, the dividend growth streak is 51%. Yeah, as you can see, last 5 years 9%, and latest 2.4% in July 20. So the dividends are So the streak is phenomenal. So they're paying over 51 year of that, and yeah, they increased past 3 years, but yeah, in the recession they decreased it. Anyway, we're here to see the earnings per share. So this pretty much good sign of the company where earnings per share are growing all the time, and also shares outstanding keep decreasing. Wow, so this pretty much good company. Total sales are increasing, but unfortunately they have high level of debt, which is not so good. So when, for example, we see inflation and the interest rates goes up, they could possibly have issues with payback of that big debt. So I don't know, pretty risky to me, but and also the current payout to shareholders is 142% from the is paid from the earnings. So this pretty much, and yeah, they do have to, I think, take depth or pushing shares outstanding. So there's only two options. Shares outstanding, shareholder payout is forecasted in the 2024 77%. So that is possible if they decreased by half of that dividends that they having. And yeah, ownership breakdown. Insiders. So there's one insider that sold the stock last year November. Ownership breakdown. Institutions 61%, general public 40. So this kind of a 60-40. So general public and institutions, there's less than 0.7% insiders, government companies. Top shareholders see Vanguard decreased, BlackRock as well. Only Capital Research increased by 5%, but I see here mostly red. And as we can see, the long-term trend is up, but I think, yeah, the correction happened at the price 52. It could drop down to, I don't know, 36 or something, or to this level, $44 per share, even to be at the same level as last year's August or September. Anyway, investing.com summary with the stock for long-term investors as a buy. Thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.